Hello traders and welcome to ChrisFX. Today I will show you how we can combine ICT concepts with hedging. Hedging is actually more or less opening two positions against each other and managing them in order to come on the winning side, of course, in the end of your trades. Now I'm gonna proceed with the video and I'm gonna show you how to hedge, and we're gonna go through several examples. Let's begin with the video right now. So this is the first example that I'm gonna show you, and the first example is based on a losing trade that I took live on Friday actually, and this is the trade that made me think one more time about starting with hedging. Now, the reason that I want to start hedging using ICT concepts is because it will give me a very high winning percentage, and since I'm a very experienced trader, I know where price might be reversing from, and you will see if you watch the live that I made on Friday 6th of October 2023, you will see that I said exactly what you're gonna see in this video. So there is no right or wrong way to trade as long as the way of trading gives profits. What we're gonna be doing, we are gonna go to the current example, and once I show you this example, then you can go to my other channel, the SMC Trader, which you can find on the top right of your screen right now. And you can watch even more examples to understand how this strategy works and how I'm gonna be trading this strategy and how I'm gonna be managing also the accounts, my personal $10,000 account and your accounts if you choose to join my PAM service, which you can join absolutely for free. You don't need to do anything. I will just be going ahead and trading for you the whole day by hedging. So we will be winning way too many trades and you will just take your profits. Of course, we are going to be splitting the profits. This is what is going to happen. This is how I win by that. You can find everything down in the description, or you can go ahead and message me on the free Discord server, which you can find again down in the description. Now, what do we see here? After this break of structure and change of character on the 15-minute time frame, we had left this fair value gap that you see right here, and we also had these breaker blocks, let's say this one and this one right here. I will just highlight this one over here as I did in the live session. I was expecting a reaction somewhere around this area, and I was down on the 1-minute time frame while we were in the live session. Let's see what happened, and I will show you where I entered. I entered somewhere around here actually already, and then I entered some more. So I entered 70% of the trade here, and I said if price comes back again, I will enter again. And there we go, we did enter again. Now, what did we see? Price was unable to give, let's say, an impulsive movement. My first point, I will be deleting, I will leave these lines for the moment. My first point where I was worried at was this point exactly right here. When you see on the 1 minute those impulsive changes of character on the opposite side, and then you see the creation of FVGs such as this one, this might be a sign that the trade is not gonna be playing out. Now, here I was a little bit happy, but then I saw that. Once I saw that, I told to the viewers that this is what might be happening now. Price might be going long. And you can see in this occasion, I will show you what happened. Price came back, retested this breaker. It came back one more time, and I had closed the first two trades right here with a very tiny loss, and I re-entered up here somewhere. And then I instantly regretted when I said that now we might retest this FVG. When I saw this candlestick, I was sure this one that we are done now. And I had my stop loss. I had my stop loss up here now. I took a full loss. Okay, so in this occasion, I will delete those lines and I will show you what you could be doing. Here you go. Here we have two positions one, this is a form of hedging where you open two exact positions at the exact same place. Now, do they need to be at the exact same place? Absolutely not. But I will explain a little bit. I will delete that. Let me delete all of those. I will explain how you could be entering this position. First of all, we said that we were exactly right here. Now, for hedging, you need to choose a lot size, a fixed lot size every single time. You cannot go ahead and calculate lots because you don't technically have a stop loss. What you can do, as an example, you can say, this is just an example what I will be doing on an account of $10,000, the one that I have with InstaForex right now, where you can join and I can trade your accounts with my account and we split the profits. You don't need to do anything. What I can say, on a $10,000 account, I can be risking 0.2 lots fixed in order to be extremely safe, which means that every pip I'm gonna be winning or losing $2. Okay, so the first trade, let's say, was exactly right here. We entered a short here. There is no stop loss at this point. So you enter a short with 0.2 pips on a 10,000 account. So you need to have some proper account in order to make profits. Of course, you can make profits on a smaller account. Now, what you can say instantly is that if price breaks above this area, I want to enter a long in this occasion. Nonetheless, what happens? You have a buy stop up here already, above this area, a little bit above, or exactly right here. What is happening in this occasion? This starts playing out. So you can say, I will either have this stop, this buy stop to get activated if price goes here, or if I see a potential sign of reversal, I will be entering my long. So now, instantly right here, you can enter your long. Forget about the buy stop. Here you enter long with 0.2 pips as well. Now, what you can be doing, what you will be doing in this occasion, you will be saying, of course, now it is printing the whole candlestick until here, but you will be saying that if my buy plays out, I will be willing to check out for potential signs of reversal somewhere around here or somewhere around here at this previous daily high, the high of Monday. Or you can go instantly for this liquidity. So you have now one sell open, let's go back to the 1 minute time frame, and one buy open at almost the exact same spot with a difference of 0.6 pips. It happened to be almost at the same exact spot. So what you can do now, you can say, if price goes all the way up, I have 2 points, this one and this one that I talked about, where I will do the following. Let's see. Okay, there we go. Okay, we approached this area. So this buy right here is in a huge profit. Okay, this buy is in a profit of 125 pips. On a 0.2 lot size, you have a $250 win right here. Okay, you have the $250 win, but at the very same time, you will say, Chris, I have also a $250 loss, my friend. And I will tell you, yes, you are absolutely correct. So what is the point, Chris, if we go ahead and we have plus 250 minus the 250, not only we didn't make money, Chris, but we also paid those commissions, even small. Okay, let's say that you paid in commissions on a broker like 1.5 euros on each position, or a little bit more. You are minus 4 actually. This is what we managed, Chris. So how does this thing work? Well, this is where also experience comes into play, and I will tell you how this thing works, my friends. And let's think a little bit ahead of time, because now I know that price, if I move forward, gave a small retracement from here, if I'm not mistaken. Ah, no, it went all the way up there. Okay. So you can say in these occasions, as I said, that you will be expecting to see some form of reversal from this area or from this area up here, from this point of liquidity. Okay, so let's say in this occasion that between those two lines, you saw the first change of character on the 1 minute, which was this one. Okay, so here what you can do with the first change of character, exactly right here, when you saw this candlestick forming, you can say I'm closing this position, this buy position. You see exactly at the close of this bearish candlestick. I don't need the FEG. So exactly right here, what I have done, let me stretch this thing. This is the buy position. I have closed the buy position with $282 profit because I placed 0.2 lots. So I have made already plus 282. But at the very same time, you will tell me again, Chris, here we are also right now a minus 282 from the other position. Yeah. But why we closed the first position here that we saw the change of character? Because now those are my points of potential reversal. Have you ever seen price going on a straight line and never retracing? No, you haven't. What you always see is something like that. Here. Down, up, down, up, down, up. What do you expect from these areas, those liquidities that have been grabbed? Price might go a little bit higher, but you expect the down. So you can say in this occasion, I have a bunch of untested FEGs. Of course, I do not expect the position to come all the way back to close this one at break even. I have made 282. And from the 1 minute, I have seen that here we might start retracing. Anything that goes above here will start giving me a loss because until here I'm at break even. Anything that goes below here, let's say that I want to close at this 1 minute FEG in this occasion, is reducing the loss from this sell position. So let's see how this plays out a little bit. Very nice. Here the market is closed. But let's suppose, just for explanation purposes, of course you can let this run even more, or you can even close partials of the loss right here, or you can say, let's say for example, of course in this occasion I would love to close the position somewhere here or way deeper, but let's say that you wanted to close the position here at the market close, okay, 1 minute before, because you don't want to be in this trade anymore. Okay, you did your hedging. Let's say at this fair value gap of the 1 minute, you closed it here. Well, from this candlestick where we were at minus 282 until exactly right here, this is 29 pips. So this is all the rest. From here, this sell position, from here until here is in a loss. Okay, is in a loss. But the part from here until here, guys, is your win. You closed 282. Until here you were minus 282, but then you managed to close your position. In other words, let's say that you have made a profit of 29 times 2 because we are risking 0.2 lots per side. Okay, so you have made $58 minus the commissions, $54. This is a prime example of hedging, and of course you can be waiting in these occasions for price to come even deeper, even though You wouldn't be saying no to this beautiful win with a $10,000 account. This means you have made 0.5% to your account just without even having a risk, because this strategy will almost always work, guys. Now, in the scenario where price is gonna keep going and going and going and it might be giving fake signals, because this will happen once in a while, you can start entering shorts here and longs and starting a new hedge and then manage this position later on. Or you can say that, for example, for the rest of the position, I have something in my mind that if price from here, let's say that we were, goes, let's say as an example, and gives me a 2 or a 3% full loss on my personal account, then I am closing the whole trade. So if I see zero retracement from this spot and price goes, let's say 3% against me, I wanna close the whole position. And now you might tell me, Chris, here you made 0.5% to your account, and here you would be losing a 3%. Two things I will answer. First of all, it is just this example that we made 0.5%. It will be way more if we would let the trade run at least until here. That would be at least 1%. If we let it until here, it would be a 2% win. Secondly, I expect to win more than 90% of the times with this strategy. So I don't care even if I win 0.5%, let's say on average, and when I lose the 10% of the times, I lose 3%. I'm still a winning trader if I do that. Okay, if you want to learn more regarding the way I am entering, because there is a way to enter, it is the original way that I was using when I was entering my normal trades and the way that I'm using when I'm entering my normal trades. Now, for more examples, go ahead and watch the similar video that has been uploaded right at the point that we are talking on the SMC Trader, which is my second account, and you can find it by clicking on the link down in the description. Furthermore, subscribe to this YouTube channel, ChrisFX, for more free educational content, and give me your opinion about this exceptional way of trading. And don't forget to enter my PAM account where I will be trading with you with this kind of strategy, so your funds will be absolutely safe. You don't need to worry. This is gonna do it for today, traders, and thank you all for watching. Until next time.